Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there. Just to let me know that it is indeed working. Hope everybody's had a fantastic evening so far. It was awesome to see most of you guys in the call that we just had for the on prop firms. That was pretty cool. Got to review some new prop firms this week, which is awesome this month. Um, I love that webinar. That's super awesome. Love going to that. Love reviewing prop firms. So super awesome. All right, guys. Well, appreciate you guys coming here for round two of tonight, talking about the COT report. I've got a couple of things prepared that I wanted to talk about. Obviously, we'll talk about the basics of the COT report and how it interacts with the scanner. We'll talk about what the COT report is. We'll also show you one of the things I'm actually working on right now. I'm doing a different another way to look at the COT report that might help us filter even more trades. It might even be better than the current commercial shift that we're looking at, which has been great. That's been a great method. I think I found a way to make this even better, but I'm in the process of back testing the I'm in the process of back testing the um, it's another version of the shift, but it's actually on non-commercials that I want to show you guys tonight. So it's pretty cool. We'll get to that if you guys are interested in learning that part of it. But let's go ahead and jump into this. Like I said, just want to welcome everybody here. But before we get started, as always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So first of all, like I said, so here's how I see the webinar going. And as always, feel free to ask any questions at any time during the webinar. You guys can just throw those questions in the chat box and I will get to them as soon as I can. But here's how I see things going. I do want to just briefly explain what the COT report is and how we use it to trade and the benefits of the COT report and the limitations of the COT report. I also want to make sure that we cover that. And then I secondly also want to cover how we interact with it currently with the scanner. And then lastly, I want to show you my current innovation with the COT report. I think it's important to constantly try to find better ways to trade and find things that we can do. And if my back testing goes well with my non-commercial shift and I have a specific way I've been doing it, if it goes well and proves even perhaps more consistent than the commercial shift, that may become what gets added into the scanner in place of commercial shift. If anything, um, it might become another column on the scanner. I don't know if we'll do that. The scanner's getting kind of crowded with data. So I'd rather just have the best data possible rather than just adding another thing just to add another thing. So that's kind of what I'm thinking of doing with the scanner, is just making sure is this actually the best thing that we could possibly do? Anyway, that's what I'm I'll show you guys that towards the end. It's going to be pretty darn cool. But like I said, let's make sure we just kind of cover the basis on the COT report. So for those that are new to the program or those new just in general to trading, um, the CFTC, they're a financial regulatory authority here in the United States. And what they do is they monitor the commodities and futures markets and they make sure things run smoothly. And one of their responsibilities is to release what we call this Commitment of Traders Report, or COT report. And it's located right here on this ribbon. If you come to the CFTC.gov website, just on their homepage, CFTC.gov, and you go to Market Data and Economic Analysis, and then click on Commitment of Traders, it brings you here. And this is where all the COT reports are. So there's not just one COT report. There's COT reports that we call legacy reports that are on different exchanges. We have this financial futures report. And then we also have these disaggregated reports that deal with things like more commodities like agriculture, petroleum, natural gas, metals, electricity, and so on. We use this on the scanner now that we've added oil, gold, and silver. I have to go into these reports specifically to get that data each week. That's actually what takes me a while. I actually have a method to capture all the Forex COT data, and it takes me like 20 seconds to update the Forex COT report data. It's really, really quick. But when I have to go and get the individual data points for gold, silver, NAS 100, and oil, it takes me actually about three, four, five times the time just for even fewer pairs. But anyway, I don't mind doing it just because it takes a little bit longer, but this is where we get it. So let me show you what the most, so let me show you. So the COT report, for those of you that are new to trading, just in general, it stands for Commitment of Traders. And what it does is it shows us what the banks have been buying in the last week, what their current holdings are on things like the euro, the Japanese yen, the British pound. We want to know what they're buying, because if we can know what they're buying, that's huge. Because if if I know that the banks are buying the euro, well, that's pretty good valuable information, right? Like I want to know that that's what they're doing. If they're buying the Japanese yen, I want to know if they're buying the Japanese yen or selling it. Okay, it's very valuable information. And there's so many different ways to use it, and there's a lot of different data points that we gather and look at. And so I try to make it simple, and I try to show you exactly what we're looking at and what's actually important, because there are a lot of reports here. The most famous report that you'll find pretty much anybody on YouTube or anybody that trades the COT reports uses is this one right here. It's you'd be like, why this one? It's actually the Chicago Mercantile Exchange. So the CME short format futures report. This is the one that everybody pretty much uses. You go to any website like barchart.com, which looks at COT data. This is the one they're using. This is the one that we use on the scanner. This is the one that like so many other people I could name use as well. Um, so this is what it looks like. This is a COT report, okay? And this is always going to have the most recent COT report. And it's actually it's just boring, right? It's just a bunch of data, but I love it. I love this thing, right? So um so this is what an entry looks like every week. So it actually comes out on Tuesdays. They collect the data, so that's why this is always going to be dated a Tuesday. But the data, this is actually released to the public on Fridays at 4 p.m. Eastern. So you can access this on Friday at 4 p.m. Eastern for free every week, assuming that there's not a federal holiday during the week. And then, of course, it'll come out the next following Monday typically. But if it's just a week where there's no holidays, you're going to get it every Friday at 4 p.m. Eastern. You just come in here and grab it. Um, and this is an entry right here. This is a quick little entry on the euro. So these are euro contracts, euro future contracts on the CME. And then they break it down into what we call commercial, non-commercials, and commercials. Okay. So these are the two distinguishing participants. They're known as participants. And let's kind of break those down real quickly. So in general, we follow non-commercials. Okay. Non-commercials are your big bank speculators. They're known as large specs. And these are companies that buy and sell. These are companies um, that buy and sell currencies or commodities with the purpose of simply just the only thing that they're doing is they're just trying to make a profit by buying and selling futures. That is their job. When they go into work in the morning, their job is to buy and sell futures so that those futures will be worth more in the future, right? And and um, so that it makes their bosses happy and makes the company grow and they enrich themselves, right? That's the only reason why non-commercials exist. They don't have any other purpose. Okay. Um, that's it. They just try to make money. Okay. Commercials have a little bit of a different purpose. Obviously, everybody in the world just wants to make money, but they have a different way of approaching it. And they use the futures market for a different purpose. It's real simple what commercials does. Basically, they use it for non-speculating activities. Okay. That's probably the best way to put it, actually. So a commercial trader who trades on the futures market might go out there and say, well, hey, I'm a farmer and I want to hedge against my crops because we're not sure if we're going to have a great year. So I want to make sure that I hedge that in case um, things don't go the way I hope they go. right? Um, and that's like an example of a futures trader. Maybe you're Walmart and you have a lot of stores in another country and you want to hedge the country's currency. So you'll hedge against the currency to balance your inventory and your holdings that you have in that country in case that country goes into some kind of like hyperinflation scenario. You might do that just to balance things out. So they're not really trying to make money necessarily, but they're using the futures market to hedge their portfolio and to conduct operations in their business, right? So that's who commercials are. You can actually read about that. You don't have to just trust my word on it. You can actually go read it on the CFTC website under COT data. They have a what they call a it's called a explainable document or something like that. Just read it. It's a Word document. Some of them, there's like one of them that's like 9 pages long. You read it and it tells you about each participant, what they do, and why they're classified. So when you trade on the CFTC, with these exchanges with the CME, you have to apply to be a trader on the CME, and you have to report your net assets and your responsibilities and things that you're doing to apply, right? And so that's how they distinguish who's commercial and who's non-commercial.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Okay, so that brings us to the next part. So you'll notice below these two different participants, you have the long and you have the short. There's also the spreads, and then again, it's just long and short again for commercial. I really just focus on these numbers right here, these two numbers, and I focus on these two numbers. I really don't do anything else. I also like to look at the percent change from the previous week, which is also important to look at. But I like to look at like I said, I like to look at this um, these two numbers on each one, the long and short for each participant. Now, why is this important? Because these are their current holdings. So, like for example, on non-commercial right now, the banks have mostly long positions on the euro, and they have about 100,000 contracts on short on the euro. So they are mostly biased to the long side. It is important to see the shifts, right? So they are shifting right now. You can see they are adding to their short position. They are taking away from their long position. It is important to take a note of that because that does often have an effect on the market. Um, but anyway, just wanted to point that out. Okay, what else is important here, guys? So the biggest market is the commercial market. So even though we like to follow what the non-commercials are doing, that is the standard and that will continue to be the standard. It is important to note what commercials are doing. So commercials are the biggest market by far. You can see that they have the most contracts. They have 570,000 contracts short and 433,000 contracts long. So a lot of contracts, right? Much more than non-commercials. So when these guys usually make a move, it often has a ripple effect in the market. Often, I won't say always, but often does have a ripple effect in the market the following week. So that's where we're currently built. We've built that into the scanner. When these guys shift, we take a close note of that. We won't just take a position just because of the shift. Obviously, we need to have sentiment confirmation and or um, the long-term signal needs to give us confirmation, which directly comes from the non-commercial data. If we get that kind of confirmation, then then we'll go ahead and take the trade and it'll indicate a strong buy or strong sell for the week. Um, and so we actually use both data points. We use commercials and non-commercials for different things. So I use non-commercials to figure out my long-term entries, my long-term positions, and I use commercials to figure out my shift. So when these guys shift, that usually has a big effect on the market the following week. And that's why I've done that. Okay. Okay, any questions so far on the COT report? So you can search through here. If you ever want to navigate the COT reports, all you have to do is just do a Control F on your computer if it's a Windows or a Command F on a Mac. And when you're in here, just search the abbreviated currency that you want to find. So if you want to find the Australian dollar, I just search AUD and it takes me right here to the Australian dollar because the report's pretty big. And so if you don't know where things are, you're going to have to scroll through and try to find it. So I just Control F my way through. Right here's NASDAQ. So you can see here's NAS right here. Um, if I wanted to search for, I don't know, the Swiss franc, I would search CHF and it takes me up here. Here's the Swiss franc. Here's non-commercial, commercial. Here's their positions. Here's the change in positions from the previous week. Oh, I wanted to mention this. It's very important. This is one of the secret sauce things that we do, which is super cool. And we've built this in the scanner. It's very important that when you're analyzing COT report data, that you don't just go off of the shift only or just because one of the things that's important to recognize is like with the euro. The euro is the most popularly traded futures contract out there, I believe. I think it is. And you saw how many contracts were traded on both sides, both non-commercial and commercial, like in the hundreds of thousands of contracts. Well, look at the Swiss franc right here, much smaller, right? You've got 10,000 contracts versus 14,000 on the short side here. On the commercial side, you have 20,000, 22,000 a piece, right? That's not nearly the tune of the euro. So one of the things that unique things we did is we made this a proportional percentage. So um, although like the Swiss franc doesn't have as much interest and it's not used as much across most financial markets, we have to proportionally find out what's the percent change each week. And I actually built that into the scanner. If you actually look at, I'll show you the journal. Actually, we built that in. Actually, it's actually built in right here. Let's see. No, it's not built in right here. I think it's built in right here on the comprehensive report. Yeah, like when you come down, here's all the data for the currency pairs or currencies right through here. Here's your non-commercials for the week, and then you've got the commercials for the week right here. Those are their current holdings. Right here, this is for NAS 100 US 30, gold, silver, and oil. These are the changing contracts that we look at. So I only do this for commercials. So commercials, we do look at the change, and you'll notice like the euro had a really big net change as far as total contracts go. But like something like the Kiwi only had a 412 contract change. That may not sound like a lot, and it's not a lot. Not a lot of contracts that changed, but we also have to make sure that it's proportional to the sum of all positions, right? So just because it only had 412 contracts that changed on the Kiwi, what if there's not that many contracts outstanding in the first place, right? So we have to make things proportional, and that's what's really cool about the scanner here is, or about the data that we look at, is we try to get things. This is the end result actually down here. So the end result is a percentage net change proportional to the sum of all positions, and that's exactly what we've done. So the Aussie actually had a really big net change as far as percentages go, and let's see, actually find the Kiwi right here. Okay, Kiwi was still small. It was still a 0.62% net change. Still pretty small, but again, I had to make that proportional to figure things out. But this is actually what we use. We use this information to basically plug into the scanner every week. Is this net change? It's pretty cool. So yeah, the Aussie had a pretty big net change. Let's see, on the negative side, the pound had a pretty negative. Nah, not, it wasn't huge, but it did have a negative net change. Oh, the franc had a negative net change in commercial positions, right? Okay. So that's what we're analyzing. Here's just the net change in positions. Um, yeah, and we even study this on non-commercials too for at least the currency pairs. So we've been studying that. I need to study that for NAS 100, US 30, gold, silver, oil. I need to do that too. That's one of my next projects. But so I wanted to, this probably won't be a very long webinar, but I'll show you the next. So this is the third thing I wanted to show you guys tonight, unless you guys have other questions. So I'll just continue with what I was saying, unless you guys have other questions. But so the next thing that I think will be a game changer with the scanner. So this is probably the next thing that will change on how we look at the data. So the shift, I've been wanting to improve the shift data. Um, shift data is useful. You'll notice this week, like when you interact with the scanner, let's actually go interact with it for a second. Let's go to the scanner. Um, you'll notice that there's actually not a lot of there's actually there's a lot of shifts this week, but they don't get passed into the overall signals, and it's actually been a good thing. The shifts trades have actually not been very good this week. There's actually been some faulty signals that have like if you were to only trade shifts this week, you'd probably be like having a pretty bad week. So thankfully, that's why we've built checks and balances into the scanner, so it's not you're not as likely to just jump both feet into a lot of bad trades. Thank goodness we've done that. I think the scanner's gotten a lot better and is going to continue to get a lot better at locating trades that do meet all the criteria. We're going to get more through that are like that. But yeah, you'll notice here there's actually quite a few. If you just filter by COT shift, there's a lot of strong buys and strong sells this week, but a lot of those have actually been erroneous signals. Like if you were to just trade only shift this week, you would be down. That's not the case every week. There's most weeks if you trade the shifts, you're actually going to do very well. This is just one of those weeks where it's like the shifts have not been very good. Um, and that's why we built the overall signal, because I don't want you guys to just go off of sentiment only or long term only, really. I don't want you to go off of shift only. We kind of trade a cumulative score across all the things. And that's why we get these overall signals right here. Oh, which by the way, I made an adjustment this week. I think I fixed, you know how it was saying loading all the time? Like you'd have like a couple of pairs that say loading. I think I solved it. Okay. So it shouldn't, I basically made it so anyway, I don't need to explain everything, but I made it so that it doesn't, the data should actually flow through a lot faster from its original source to the scanner. So you probably have noticed in the last 24 hours that it hasn't had any issues, hopefully. I think I fixed that. So that should not be an issue again, I don't believe. Um, yeah, it should not be an issue again. Um, Let me know if you guys see it happen, because I think there's another thing I could try, but I think I solved the problem. And it doesn't appear it's doing it right now. So I think we're sitting really, really good with that data that we're pulling for sentiment index. Yeah, right now it's crystal clear. Everything's perfect right now. So that's good. Okay, so let's move on. So shifts really cool, but and most of the time, if you trade the commercial shift, those are pretty good signals for the week. But on occasion, like you're just going to capture a week where it's just like it's not right. Like you're just going to get bad trades. So the thing that I've been thinking about that I need to do, and I've seen some other groups do this out there that I follow that trade the COT report successfully. And I thought, I want to do something similar. And I've seen like three different groups do it different ways out there that trade the COT report. What I want to do is I've been wanting to focus more on non-commercials because they are the large specs. They are the people we want to follow. Commercials, again, you don't really want to follow them. I've only been using them for the purpose of just capturing their volume because they push so much volume through. When they make a shift, it often has a big effect on the market in the following weeks. But it's not always accurate, right? Which is why you have to go off of those checks and balances on the scanner. So since non-commercial is who we want to follow, and by the way, when you look at the scanner, non-commercial data is the long term. So anything in this long-term column, this is based off of what the banks have been doing on a longer term basis. Okay, so if it says buy right here or sell right here or neutral, that is the bank's current long-term stance. You can take it to the bank. That's what they're doing on a longer term scale. Okay, pretty cool that we've got that into the scanner now. Um, we don't currently do anything, and this is where I think we're missing out, and this is what I want to get added into here. We don't currently do anything with the non-commercial um, shift. And I think that's a mistake. I don't think it's a mistake necessarily. Well, I think it's a missed opportunity. Okay, we could really make the scanner like the most elite thing you've ever seen if we were to do something with that. So right now, what I've been back testing is not necessarily the non-commercial shift over 1 week at a time, but a smooth averaged over like 5 weeks. I've seen other groups do it over like 12 weeks or 10 weeks, and we may do something like that. I want to because I've been back testing 5 weeks with some pretty good results. So it's not just like going off of like the net change over the last, week to week. It's like, what have the banks done in the last 5 weeks? Because that's a trend. If they're subsequently adding to a position pretty heavily over a 5 week period, we want to know that. Okay. Because that, if we can smooth that average out, because some weeks they may add a little bit, maybe so they'll take away a little bit, but over maybe 5 weeks or 4 weeks or 6 weeks or something like that, if that net shift appears to be growing one way, then that actually might help. But that might be a better and more accurate depiction of what the banks are actually doing, not just what they've done in a week, but what they're actually doing. And it'd be a lot easier to scale out of bad trades if you know that you're in fact in the right direction, if you're in the direction that they want to go. So you're less likely to be swept out through liquidity grabs. You're less likely to be swept out through stop losses and things like that. If you know what their goal is, if you know for sure this is what their goal, because the only downside to the long-term signal is it doesn't tell you if they've been shifting. So when you look at the scanner, this is just pure and simple, like this is like their current holding, but it doesn't tell you like, oh, they're indeed shifting this way or they're indeed shifting this other way. That's the long-term column does not tell you that. And that I think that's just a missed opportunity because the long-term column just tells you these are their holdings. So consider a long-term signal in that direction. That's about as basic. It's a good signal. It's really nice. You just don't want to trade that only. It's helpful data, and we want to keep it on the scanner. It's worth keeping on the scanner. It's very valuable. So definitely consider it, and we do consider it. It factors into the overall signal, but it's not everything, right? Um, so that's the next thing. I hope to get that implemented soon. I will inform you guys when it does get implemented, but I'm still back testing and trying to get. I just want to make sure it fits with our goals because our goal is a weekly signal, And so um, we want to be the most elite traders, and because this is kind of how I've positioned myself and I've positioned you guys, is basically to be able to become very successful traders who could take perhaps the best weekly signals that you could possibly find on the internet. And I want this scanner to be known as that. It is the scanner that absolutely crushes it in terms of picking the direction of the week. And there's nothing like it, is what we're trying to accomplish. And I think that's the next level of eliteness I'd like to get to. And I think it's going to come through um, looking at the net change, a smooth average net change over the last 5 weeks is what I've been going off of. And if we can get that added in, I think that'll be really great. So anyway, that's the next plan, guys. That's what I'm working on right now. I thought I'd share it with you in case you were interested. Any questions about what we're doing? I'll keep this class short unless there's other things you guys want to talk about. Um, but yeah, guys, as far as holding the trade, let's kind of do a recap. So as far as these are the signals right here. This is what's currently labeled on the scanner. It's Euro CAD long, CAD yen long, NAS 100's been doing great long, Euro Kiwi strong buy. Oil's been a little bit of a bummer this week, but that is a strong sell. But these are the signals as of right now. I still have my Euro yen sell, obviously, because that's what I posted at the beginning of the week. Um, Let me actually pull that up. Let me see where I'm at real quick. Um, as far as these signals go, let me see where I'm at on these. And I still have my Aussie yen buy. So I'm in an Aussie yen buy. So Euro yen sell, Euro CAD buy, and an Aussie yen buy as well is what I still have going on in there. And the Euro Kiwi buy is what I've got going. My CAD yen did close out, unfortunately. But yeah, I'm just going to hold the rest of the week. Those trades, we'll close them Friday. Hopefully, we can still get a profit this week. That'd be really cool if we can. Um, and then we'd end the month on a perfect streak. And then, yeah, we'll just continue. Like again, next week, you just do the same thing all over again. Next week, you're going to take the top signals, put in an appropriate stop loss, use the average daily range is kind of my suggestion, and hold those trades all week, right? And just do that repetitiously every week, over and over and over again. And that's the way to make money using the scanner. All right, guys, well, I'll go ahead and wrap up. It was really cool that you guys would spend your evening with me every Wednesday. It's really awesome. I hope this is valuable to you. Enjoy the rest of your evening, and I look forward to seeing you guys in the next webinar. Thanks for coming.